Great, thanks very much, Matt, and thanks to Nicole and the organizing committee for the opportunity to present today on behalf of Renascor Resources on our Siviour battery anode material project. This isn't our first opportunity to talk about this project. We were here in an earlier stage of development. We've now managed to make, we think, some considerable progress, in large part thanks to proving up a large resource, and a lot of thanks to our exploration director, Jeff McGonigal, who's here today, and then move through the study phases, and that's being led by Simon Ballestrin, our general manager for project development, who's also here. And we're now at a relatively advanced development stage, and we think we're relatively close to moving forward and making a final investment decision. We completed a detailed feasibility study earlier this year on both an upstream and a downstream component. We have our regulatory approval, our PEPA. So from a regulatory standpoint, we're ready to move forward on that upstream development. And we also have a financing package in place with a conditional loan from the Australian government under their critical minerals facility. Now we depend on, amongst other things, market forces, and we think they're particularly strong for graphite as it makes its transition from an industrial to a battery mineral. And what's next for us, we hope, is to, in particular, convert some of our non-binding agreements into binding and allow us to move forward. In terms of the project itself and why we think we have a Tier 1 asset, we have a big graphite deposit here in South Australia, really Tier 1 by any stretch. It's the second largest proven reserve of graphite globally, the largest reserve of graphite outside of Africa. And it also has a relatively favorable geological orientation that we think is going to allow us to produce a saleable graphite flake concentrate at a very competitive cost. Our study showed very compelling economics. And again, we have a financing package in place, and this has proved to be especially difficult for these transition minerals that don't have defined markets. We also think that the economics of this project really justify moving forward first with the mining side, and we have a relatively achievable capital requirement, which we think we're going to be able to meet. And then I guess finally, we give this market, this graphite market, this battery minerals market, something it currently doesn't have, largely because of the dependence on the Chinese. We think we can provide both a secure and a sustainable product, 100% Australian-made, 100% South Australian-made product for this growing market. Quick corporate overview. We trade under the ticker symbol RNU. I'll just call your attention to our cash position. We're in a relatively strong cash position with over 120 million in the bank at the end of the last quarter. What this means is we think that initial capital requirement is quite achievable with that debt component. Now, in terms of what we're trying to achieve, we want to have a vertically integrated project that combines both the traditional mining operation and goes one step further and value adds that into a higher value added product. So we'll be producing a graphite flake concentrate at the mine site, but then we'll have a secondary operation where we'll convert that material, further refine that material into a purified spherical graphite form. That form of graphite is then used by manufacturers of lithium-ion battery anodes. They coat that material, create active anode material before giving it to cell makers, and it winds up in electric vehicles. So the key products we're producing are going to be graphite flake concentrates at the mine, and then converting that into purified spherical graphite. And our customer, our key customer, is an anode manufacturer. Now, what's happening with this market is it's going through a major transition where previously graphite mines, and really most of what's currently in production, in particular outside of China, is relatively small scale and feeds into the industrial market. Now we've heard about for a long time this battery transition and what that means. Well, with graphite, what that means is it's justifying the need for larger scale projects. And in terms of scale, to give you an idea of the kind of ore we're moving, we think we can have one of the larger graphite mines globally based on the scale of our resource, but we'd still only be moving in a year the type of material you'd move in an iron ore mine in a day. And this is the transition that graphite's going into, is justifying public companies like us spending hundreds of millions of dollars to create a project. And what's really driving that is this transition to electric vehicles. And graphite is just starting this process right now, where more and more of that is being used in electric vehicles. And notwithstanding some of the economic downturn we've seen during 2023, on a macroeconomic scale, higher interest rates, which make it difficult to meet capital requirements, this EV penetration seems to be going unabated. And if that happens, that means we need more anodes. So that nice curve we see about future anode material, if you need more anode material, you're going to need significantly more graphite. And again, graphite's kind of a funny material even within the battery space, because there's both a natural and there's a synthetic material. They compete for the market. Currently, the synthetic material has a larger market share, but as the market develops, we're likely to see significant increase in the amount of natural material, the kind that needs the graphite that we'll be producing here in South Australia. And that's largely because it's less expensive and it has more favorable ESG requirements. And the types of processes that are used in China to produce this product cheaply are very difficult to replicate outside of China. And that's why when we look at some of the cost curves and importantly, demand curves moving forward, you're going to need significantly more graphite flake concentrates. And right now, when we look at the sort of mines that are in development right now, there simply aren't enough. So really the niche we want to fill is we want to be one of the new sources of ex-China material by producing this here in South Australia. But again, we want to go one step further. We don't want to just produce graphite flake concentrates. We think we can do that with our projected mine at costs that are competitive anywhere globally. But if we go one step further and produce purified spherical graphite, we can fill what is maybe a more unique niche, is where we can be one of the lowest cost providers of this refined material and start to compete with the Chinese, who have a monopoly. They're producing 100% of this material today. And when we think about what's driving this, supply and demand are the most important things. Ultimately, China's demand for material is significantly larger than its supply. But the other thing we're seeing is policy initiatives. And so this year, there's been a lot of talk about the Inflation Reduction Act and some of the requirements for ex-China supply. And we just saw recently, at the end of October, the Chinese announced export restrictions, in particular on graphite, the kind of graphite that goes into lithium-ion batteries. Those export restrictions go into place today. So again, we think that this is a good market to be in, because we're going to need a significant amount of new material, and we hope we'll be one of the first to provide that from here in South Australia. Now, in terms of the project itself, the mine is located just outside of Arno Bay, south of Whyalla, north of Port Lincoln. They will be producing a graphite flake concentrate before we truck that to Bolivar, where we'll upgrade that into a purified spherical form and ship it out of Port Adelaide. Now, in terms of what drives the economics and makes this a Tier 1 asset, there's really two factors that make this deposit interesting. The first is its scale. It's large. It's one massive ore body. It's not a series of deposits that are put together. It's one massive ore body. But it also has a relatively unique flat-lying orientation. This is a slide that I think we shared last time we were here, but it still holds true today. And this is one of the differentiators from our project, in that we have relatively thick intersections of good grade graphite that are near surface. So we combine both the scale and the shape of the ore body. We think we can get a relatively low mining cost. And when we produce through the flotation plant at scale, we can produce that material at amongst the lowest cost of any new development globally. The other advantage we have is we have our regulatory approvals. We've gone through the hard yards of meeting all the requirements of the mines department to get started. And what we've seen in particular in the battery mineral space and the graphite space is it's been easy to build the midstream processing capacity, but there's a real gap in getting mines up and operating, and that's simply because of the timing to get regulatory approval. So we have that in place, but we really don't want to stop there. We want to go one step further and process that material into a higher value-added product. And we're going to do that through a secondary operation that involves two steps, a micronization and a spheronization step, and then we'll purify that into a purified spherical form that can be used by anode manufacturers. And we think this is one of the relatively unique projects in that we become more competitive by moving downstream. we believe we can produce a graphite flake concentrate at the mine site at rates that are competitive, in particular with some of the new projects that are coming out of East Africa. But if we move one step further downstream, we can take advantage of our location in a safe industrial jurisdiction like Australia, where you can justify the added expense of doing a higher value add and produce that higher value added purified spherical graphite. And we think we can pass the cost advantage from the upstream down to the downstream. And that's simply because the largest component cost in producing the purified spherical graphite is the graphite that's going to come from the mine site itself. So in our case, we're going to be using our own graphite. And when we look at sort of the cost basis, even at today's prices, which we'll consider relatively depressed, we're going to have a cost advantage against what it would cost if we had to buy that material on the market. But if we look forward to the life of the mine and what we think is going to happen to graphite prices as that demand picks up, we think this is only going to accentuate the advantage of the mine site itself, and then we'll pass that on to producing purified spherical graphite at a low cost. Economics of the project look really good by any measure, $1.5 billion net present value. And again, that startup, to get that upstream operation at $215 million, we think this is going to be manageable with a combination of our own cash and the debt financing facility. A quick word on ESG credentials. We recently completed a life cycle assessment, and we're relying a large part on tapping into the South Australian electricity grid, using the large proportion of renewable energy we have here in SA, and we think we can produce that purified spherical graphite with a carbon footprint that's about a third of what's currently being produced. Next for us is really converting those non-binding agreements into binding. And then that'll allow us to move forward with the construction, we think, first of that upstream. We're already aligned with really the major anode manufacturers globally. We're currently trying to negotiate favorable long-term pricing, and then we can get into the construction phase. The $185 million conditional facility from the Australian government was really a major boost for our project. And we really owe a debt of gratitude to the government for allowing this. Projects like this in this new minerals that don't have defined markets really need this kind of support. And the critical minerals facility has been a real boon, not just for us, but for the other companies that have been able to rely on that financing when the current market simply doesn't have the ability to offer that on a commercial scale. And again, we're competing against the Chinese who make this capital readily available. The fact that we have that from Australian government is a major boost. As we move forward, the first thing we want to do is start our mining operation. We want to get into the production of purified spherical graphite. But as we move forward and we reach our full potential, if you look at sort of the scale of growth, we'd like to replicate that stage one of that upstream mining operation and then move into the production of purified spherical graphite. But then as the market develops, we have every expectation of being able to move further into the production of not just purified spherical graphite, but even perhaps in collaboration with some of our anode offtake partners, anode material itself. But right now, really the focus is on trying to get that upstream started. We recently announced the completion of a land acquisition agreement. Moving forward, we're already starting into the FEED process. Then we want to finalize those binding offtake agreements and put our financing package together. And that'll allow us to make a final investment decision and hopefully start construction on this. And our ultimate goal, we believe, is to produce 100% Australian product. And we think we can do that competitively, sustainably, securely. And we have the potential to become one of, if not the largest providers of this material globally. Thanks very much.